Hi guys, my name is Beth and welcome to our analysis of Forex swing analysis. Okay, so as you guys all already know, I always start with the USD index to determine the overall strength of USD. So we have a lot of candles behaving above the moving average in 4-hour chart. That means that dollar is strong. So trend is up. Our decision is to buy, look for opportunities to buy USD. Okay, let's analyze the USD Japan yen. Okay, so we also have the nice uptrend going on, meaning that the dollar is getting stronger against the Japan yen. And yesterday we have this up movement, and the size of this up movement is, as you guys see, it's not too small, it's not too big, the meaning that it's likely to demonstrate Fibonacci extension. Then as on Q, we have the nice retracement around here yesterday, and it reached about the 0.61 Fibonacci retracement. That is the minimum possible good zone to enter a trade. So yesterday I bought USD Japan yen risking 0.7%. So I entered around this zone and I set my stop loss below the local minimum, and since then it has been accumulating profit nicely. So what I expect is that usually market goes continue to goes like that, and it will retrace a little bit, and which usually gives us another good zone to enter a trade. Then it returns the original trend and hits some Fibonacci extension. So right now my take profit is Fibonacci extension 1.618 at the price 150.74. So ideally I'm looking for one more retracement like this so that I can buy more, risking additional about 0.5%. So at this point I can update my stop loss around here, so that which gives me the additional bullets to buy USD. Then usually the market returns the original trend and hits the Fibonacci extension. So that's what I am anticipating on USD Japan. And yesterday our entry here was really good. We entered a really good zone around this, and it was just a perfect execution, perfect reading of the market, and it's we have been accumulating profit since then. Okay, so USD Japan yen trend is up, leg size is okay, and our decision is to keep our current position, which is risking 0.7% of my account. Okay, next, USD Canada dollar. Okay, so yesterday and we have this up movement going on, and yesterday market also retraced it into good zone between 0.5 and 0.618, and here it's a little bit fake out is going on, and I entered the trade, risking 0.2% of my account. So as you guys already know, my risk management is that at any given point, if everything goes against me, I'll be losing 1% of my account. So keeping that in my mind, so I risked 0.2% of my account because I still have some position on New Zealand dollar USD. So 0.2% was the maximum amount of position I could risk in this position. So what I'm expecting is that it can fake out a little bit further down there, and soon it should be returning to original trend and reaching and hitting some Fibonacci extension 1.618 up here. Or another possible profit target is that so we have little bit very small up movement starting here, retracement here, retracement. It could also hit Fibonacci extension 2.618. Which one is true? I have no idea. So market is all about the probability. So Just to be safe, and I usually like to take the minimum of the all possible take profit targets. So on this Canada dollar position, my take profit is 1.3634. So let's see how the market unfolds. So market is faking out a little bit right now, and it can still fake out like this and return to original trend like this. So let's see how the market will unfold. Okay, USD Canada dollar trend is up, leg size is okay, and what is our decision is to keep the position 0.2% and let it run into take profit. If everything goes bad, if I lose this position, I'll just lose. I'll be losing 0.2% of my account. That's totally fine. Okay. Next pair, USD Schweizer franc. Okay. So we have overall this uptrend is going on, meaning that dollar is getting stronger against Schweizer franc. So we have the latest up leg is this up leg, and if it retraces into good zone between 0.618 and 0.382, then it will be a good time to buy Schweizer franc. Right now it's not in the good zone, and we need to wait until it retraces. So for me, I don't have any additional bullets or positions to risk it, but if you guys looking for opportunities to trade, I would recommend to buy USD Schweizer franc, let it retrace into good zone around here, then you should be buying USD Schweizer franc. So it usually goes like this and hits the Fibonacci extension. Okay, USD Schweizer franc trend is up, leg size is nice, meaning that not too big, not too small. It's likely to demonstrate Fibonacci extension. Our decision is to wait a good zone. Okay. Next pair, pound USD. Pound USD. Okay, so we have up and down sideways moves going on, and it seems that the downtrend has been starting, but still I would like to be absolutely sure that downtrend has begun. So the way I do is that notice how often market goes back and forth off the moving average if it's still behaving in the sideways action. So the maximum span I'm looking for is this, right? From here to here. That's how often market returns to moving average here. So I would like to make sure that new trend is begun. I have to wait at least twice that time window, and if the market is still behaving below or above the moving average on this twice as much time window, then I'll be certain that market has started demonstrating some trend. So for that to happen, I have to wait at least Monday, February 12th, and at this point, if the market is still behaving, still behaving down the moving average like this, then I'll be sure the downtrend has started. And if it's still in the good zone around here, around the 0.5, then I'll be selling pound USD. So it should go like this and hit some Fibonacci extension right there. So right now the best decision is to wait to make sure that downtrend in pound USD has begun. But right now we have to wait. So still technically it is still performing the sideways and no trend, so we're gonna do nothing. Okay, Euro USD. Okay, so 2 days ago, as you guys see, my take profit was Fibonacci extension 1.618 at the price 1.0714, but I took the profit earlier because I had the much better trade opportunities on USD Japan and USD Canada dollar. So if I kept my Euro USD position at most, so my take profit target will be this, right? There isn't much more profit target. Instead, I closed the profit and use it my bullets for the USD Canada dollar and USD Japan yen, and which has much more room to hit the take profit. So that was my reasoning, and those special cases do occur, and at any given point you guys should be asking these questions. Okay, if I make this decision, if market goes my way, how much am I gonna win? If market goes against me, how much am I gonna lose? So weighing in those two potential losses and potential wins of the different choices, then you should be making a decision. So it's a little bit, it might sound like it's breaking the discipline, but if you become accumulate more experiences, and guys will be able to see the pros and cons of different decisions. So when you have a really good decision, it's okay to close the profit a little bit earlier, then enter another, and it should actually can go into your trading plan. But for the beginners, and when you start trading, I wouldn't recommend this kind of thinking, because it will start messing your discipline and consistent executions. So anyway, on my part, it was a good decision, and market has been accumulating profit nicely. So Euro USD. So what's my reading? So down leg started like this, retrace it, and the complex down leg has been starting. And to enter Euro USD, I need the market to retrace this really big like this to reach about the 0.5. Then I will start selling Euro USD. Right now, I think this complex leg is still continuing. I think it will still continue like this, and I'm waiting for a big retracement like this. So until that, I'm not gonna touch Euro USD. So Euro USD trend is down, leg size is nice, and our decision is to wait the big retracement. And one thing to notice is that the complex wave is forming. You see, like this, and they all making up this huge, long-lasting complex, the down leg. So that's what I mean when I say the complex. Complex waves. Okay, Aussie. Let's analyze the Aussie. Okay. So we have this down leg is going, it retracing, but I didn't enter the Aussie. I didn't sell the Aussie because this leg size is not ideal. So if I compare it to other legs, it is too small, not smaller than here, smaller. To compare to all the previous directional legs, this leg size is not ideal. It's the smallest. So that's what I'm skeptical, and when I'm not confident, I'm not going to trade. So that's what I mean. Trend is down, but the existing down leg size is too small. It could be still part of a retracement or a bigger leg. So this and meaning that local minimum maximum for the stop loss can be easily taken out. So decision is to do nothing. Okay, New Zealand dollar USD. So we had our first down leg like this, retrace it, down leg like this, then market retrace it into here, right? So on this area around the 0.618 Fibonacci retracement, it is a still good zone to enter, and I sold a New Zealand dollar USD. So until that, the market has been going down, accumulated some profit, retracing, going down, and faking out the moving average a little bit. So at this point, originally my stop loss was here above the local maximum. So until now, this new local maximum has formed, and the moving average has gone down decently. So I think I updated my stop loss into this price level, onto this new local maximum. So that gave me a additional, at this point I'm risking only 0.2% of my account on New Zealand dollar USD, right? So which allowed me to create to have additional bullet and trade more opportunities. And for that bullet we traded on USD Canada dollar. So right now our decision is that on the New Zealand dollar USD, it's a trend is down, faking out a little bit, and leg size is too small. So I'm referring to this leg size. So meaning that market, yes. So this so here, yeah, for this leg size, I shouldn't count it as a leg. So by the way, so this leg size is just too small, but the moving average has gone down significantly like this. So I updated my stop loss above here. So possibility wise, it can still go up like this and take out this stop loss and return to original trend, faking out. It could also happen, but from my experience, like a moving average has gone down decently and it's not likely to happen. So our decision is that keep the existing position, so market should be behaving like this and eventually hit some Fibonacci extension down here. So the moving average is helping stop loss, and I updated the stop loss, and my current risk for New Zealand dollar position is the 0.2%. So looking at this spreadsheet, we can still see that USD is strong, and we have positioned ourselves correctly, and especially USD Japan yen is accumulating profit nicely, and we just have to keep the position until they take profit. For the Canada dollar, New Zealand dollar, USD, right now its market is faking out a little bit, but it is still in the good zone, and we should keep the position. Okay, all right, guys, thank you for the attention.